Alrighty, slightly afternoon on Thursday, 1st of June. I really can't believe it's already June. Seems like Christmas and digging snow off the drive was only a few weeks ago. So we're well into the summer. Summer doldrums potentially. E-mini S&P grinding sideways. Dollar grinding sideways. Treasuries grinding sideways. Are you hearing a theme? I'm going to run through some charts. I'm going to be, even though I have actually opened up this particular webinar to the public, there's a lot of members in here. I'm going to run this as a regular member webinar. I'm just going to go through charts in the normal manner. If anyone is in here, though, that has never seen me do a webinar, feel free to just say, yep, I'm new or whatever, and I'll try and sort of bear that in mind in terms of any of the terminology that I'm going to use. Although, in all honesty, I don't think I'm going to get into anything too complicated. Quick comment, I rarely do this at the beginning of the webinar, but I am going to do it this time, purely because we've got the seminar next week. If you go to this web address, cognitcapital.com/promo, there it is, and it's also on the calendar. I think if you just go to the calendar, in fact, I'll click on the calendar right now. There it is, June 1st specials. Click on it. It'll bring you back to that page. We are doing a seminar next week. It's the first seminar I've done in the UK in probably 4 years. I did one in the south of France, I think, gosh, about 3 years ago, and then one in the UK about 4 or 5 years ago. If you're interested, come on along. It's going to be a full day. And if you can't make it, we're going to be webcasting it as well. So feel free to check out that. And if you just want to see the analysis each morning, again, feel free to join up. There you go. That was painless, wasn't it? I don't typically do the whole marketing spiel for too long. Let's go and look at some charts. I normally start by looking at dollar index treasuries, E-mini S&P, and I will do that. This is silver. Let's jump down though and see what's going on. So treasuries. This is one I was watching this morning, and again, I just want to be really clear for those of you that are not members. When I say things like this is what I looked for this morning, or this is what we talked about yesterday, just bearing in mind, these webinars. I do the webinars every Tuesday and Thursday, but I do a video every single morning. So we had a webinar, or rather, we had a video this morning around about, God, I don't know, like 6:30 in the morning. So what I was talking about then is basically what I've been talking about for about the last week. Which is, prior to that, I'd been looking for resistance in this area here. So as we came up into resistance, I was watching to see whether we would get resistance up in this area right here. And it worked. We ground along that resistance for about 4 or 5 days. And as we started to grind along it, what I said at the time, and I drew in these lines was, well, that's the place to look for support. And, I think people sometimes get a bit confused when they see me drawing in horizontal lines, because I know that I'm probably more known for paying attention to channels or slopes. But it's not to the exclusion of looking at key levels. The fact is 99% of people don't look at slopes. 99% of people, I think, do look at horizontals. They look at where are key levels of support / resistance. So all I've been looking at is the fact that we had resistance in this area here, resistance in this area here. Would it again become support in this area here? We'd already in fact had one bounce right there. So therefore, when we grind along resistance in this area here, where's the obvious place to look for support? Right there. So we came down, we tagged it back on the 23rd, tagged it back on the 24th, and we start grinding back to the upside. I will be honest, I was somewhat surprised. I personally am of the opinion that if you look at what's gone on in treasuries for the last, well, really quite some time, it's really been a case of we see a move to the downside into an interest rate hike, which was middle of December. Then we recover. Then we see a move down into the middle of March, which was an interest rate hike, and then we recover. Fed Watch at the moment shows an interest rate hike. The chances of one in June has been like 88%, I think it is. So what am I expecting? This. I'm expecting a move back down into a potential interest rate hike, and then a recovery. That's what I've been looking for in terms of treasuries. So in all fairness, I was actually of the opinion, and I remember talking about it at the time, saying, look, this is the place to look for support, but honestly, I'm kind of expecting that we will take it out to the downside. And obviously that didn't happen. We actually did bounce at support. So support actually held. We saw a nice move back to the upside. We've seen a contract roll. I don't typically get too caught up in contract rolls as far as I'm concerned. It changes nothing as far as I'm concerned looking at the chart. Where do we fall to? Support. Where are we right now? Support. 153.05 is where I'm looking, and you can see I have an alert line in this area here, which I'll move down. So what I'm really basically looking for is, can treasuries take out this alert line to the downside? If you look at treasuries again, back up on that weekly, we've been struggling at this level since effectively December, just after the US election. So I'm actually watching Treasuries pretty closely. And I'm also watching Treasuries pretty closely for a very different reason, which is if you ask, I think, most people looking at gold and silver, what is the vehicle that they consider to be the vehicle to pay attention to in terms of, should we say, a canary in the mine, correlations, what other vehicle will you watch for in terms of a move in gold? Most people will typically say dollar index. Gold is the anti-dollar. Dollar up, gold down. Dollar down, gold up. I don't follow that. As far as I'm concerned, if you look at the dollar index and you look at gold right now, there's almost no correlation whatsoever. But there has been a very good correlation between 30-year treasuries and gold. And that's what I've been paying attention to. Look at this move to the upside out of the 10th of May. And we moved to the upside. In fact, treasuries basically moved down into the 10th of May and then bounced out of the 10th of May. Now go up and look at gold and silver, wherever they are. Well, there's gold. So look, same thing. We actually, in fact, let me look at it on the 240. It's going to make more sense because then we're comparing apples with apples. I mean, you're basically looking at the same chart. And this is it right here. So this was the move to the downside in gold into, shocker, 10th of May, and then the move to the upside out of the 10th of May. More to the point, what's been going on over the last, say, like week, 2 weeks. I mean, we're kind of grinding slightly higher in gold, but we're kind of grinding much more sideways. Whereas if you go back and look at treasuries, it's kind of the same thing. So we saw the turn to the upside out of the 10th of May. And since then, let's try and get all those circles out of the way that I just drew in. We've been kind of like drifting a little bit more sideways. Okay, so that's what I'm seeing. Treasuries, gold, that to me is the correlation to pay attention to right now. And as far as I'm concerned, if we see Treasury start to move below 153.05, bearing in mind we've got non-farm payrolls tomorrow morning, I will become a lot more wary in gold. So as long as Treasuries are working well to the upside, I'm a happy camper in terms of gold. Gold, 30-year Treasuries, keep an eye on it. Dollar index. Oh boy, dollar index. Not really a lot going on here, is there? I mean, it really, I mean, we were kind of like sideways into, again, about the middle of May, took a bit of a tumble, and now sideways again. Really going nowhere. I'm a little wary of a move to the upside in dollar index right now. I've been paying attention to a downtrending channel in the dollar index for about the last 2 or 3 weeks. And to me, dollar index, if you look at where is resistance and where is support, we're a lot closer to support than we are to resistance. On the, I believe it's on the daily chart, we started looking for a move to the downside about a week or two back. So if you actually zoom out, pay attention to where is the uptrending slope for the dollar index. This is the uptrending slope for the dollar index. There you go, working very, very nicely. And in fact, back in March, back here, I'd said to look for support in dollar index down in this area here. We actually had 2 support lines, so I was looking for a move to the upside in the dollar index from that area. And that actually worked out relatively well. We actually took a tumble subsequently, but we moved up from 98.70 all the way up to 101. Hit the upper parallel of a fairly, let's be honest, speculative modified shift, which is the downtrending fork you're looking at. So this is a modified shift. And modified shift is unique in terms of pitchforks in that it's a trend line. Andrews forks and shift forks don't give you that. So effectively, if you draw a trend line through your A, through your C, that is the upper parallel of your modified shift, and that's exactly what we have. So we fell down, we fell out of our slope. Here is our slope. Fell out of the slope, and when we reverse back to the upside, it becomes resistance. So pay attention. So back in this area here, when we started seeing a rejection in this area right here, where all those arrows are, I became very, very cautious of the dollar index because now we have a situation where support has become resistance, which tells you to look for a leg to the downside. And we saw a big tumble, big move to the downside. I was looking to see whether we would see speculative or potential support in this area right here. In other words, at this particular green line. So I was watching for potential support in this area here, which we do not have. In fact, we didn't have. And if anything, we actually have now resistance there. Support. In fact, I apologize. I don't think we even had that green line back at that time. I think I was looking for support in this area right here. That's where we were looking for support. I still think we have support there. I think one of the biggest issues I see that when people look at charts is that they look for pip perfect touches. Okay. I was looking for support here. At this particular line right there. That's where I was looking for support in the dollar. And what happens is you see a flush through the line right here. It's a bit of a flush through the line, but look what has happened since then. Since then, we've actually, let's try and draw in a tiny little circle. We've moved back to the upside. back up above the line, come back to the downside. Now we're finding support. And so I'm watching for this. I'm actually watching for a potential move to the upside. So all I'm looking for is to see whether what we originally saw was a flush, we recover, it becomes much better support for a leg to the upside. That is what I'm watching in the dollar index. There's another reason why I'm watching for that right now. And it's actually not the British pound. It's this. It's the euro. We are in, with the euro, we're in a trend line that goes back to 2015. We hit it here. Back in the spring and early summer of 2016, and this is where we are right now. We've got the UK election coming up Thursday of next week, in fact a week today. I suspect that we're going to see a bit of volatility ramp up in all of the EU pairs, the euro, the Swissy and the pound, not just the pound itself. So I'm watching the euro pretty closely right now. We've got the euro at resistance on a weekly chart. If I drop down to a 240-minute chart, we've got the Swissy bouncing off of support a second time, in fact, sorry, a third time. So just to be clear, and this is how volatile these vehicles are. So back in this area here, this is back at the very beginning of May, I'd drawn in these lines and said that's the place to look for support in the Swiss franc. We get the French presidential election, bang, up goes the Swiss franc. It weakens to the upside up to 101, and it drops all the way from 101 down to 96.90. So we effectively fell, what, about 400 pips. But look where we bottomed to within just a few pips. We get a bounce. And so then I said, well, great, I'll look for another bounce there. And we didn't quite, in fairness, touch it. We came to within just a few pips of the line and we moved up again. And so again, what I said, well, you know, if we move to the downside again, this is where I'm looking for support in the Swiss franc. So think about what we've got going on right now. We've got the dollar index close to what I consider to be support. And I know this looks choppy, but to me, that is the support I'm paying attention to in the dollar index. Weekly chart, we're very much closer to support than resistance. We've got the euro glued to resistance on a weekly chart. And we've got the Swiss franc bouncing from support on a 240-minute chart, which is the slope that I'm paying attention to for the Swiss franc. So all of these particular vehicles are, shall we say, in potential areas of a turn. Swiss franc is the one I'm really paying attention to right now for a potential leg to the upside, and euro based upon what we just looked at on the weekly chart for a potential leg to the downside. If we take out 113 to the upside, let's have a check, isn't that right? Yeah, if we take out like 113 to the upside in the euro, it would become very significant. We would be pushing through a trend line that has lasted for basically the last 2 years. So that's what I'm looking at in terms of the dollar, the euro, and Swiss franc. British pound, while we're here, I started flagging resistance in British pound about a week or two ago. I said maybe just be a little bit cautious of a bit of a pullback. We were just north of 130. I'd been saying back in March and April that I thought we'd see 130s before the end of the year, and rather... it was kind of funny. I think the last time I said it was maybe just a few days before we saw this huge move to the upside in the pound. We turned bullish the pound. Let me jump down and look at it on a 240. So we turned bullish the British pound back in March. We'd actually been looking for support down in this area here, which actually held well. And then we looked for resistance, to be fair, here. It became support. We looked for resistance. It became support. We look for this resistance to become support, 1 touch, 2 touches. This resistance became support. And you can just see this continual stepping to the upside in the British pound. And you can see this is back around, when is this, which month? This is April. So this is around April 13th. What I said was I would look for support down in this area here in the British pound. And at that time, I said, look, you know, everything's bullish. I still think the pound's going to go higher. I still think this move to the downside post-Brexit is totally overdone. And we'll probably see pound back in the 130s before the end of the year. And that's when I said it right there, which is the middle of April. And it was basically 2 days later when we saw this huge 400 pip move to the upside. We draw in an uptrending slope and we start watching for the pound to the upside. Started watching to see whether we get support in this area here, which we did, 129.15, but that simply carried us up just shy of the 130 area. And that's when we started to become a little bit more cautious in the pound, because at this point we're now rising up into resistance on the weekly chart. And not only are we hitting resistance on the weekly chart, we're also hitting resistance on the daily chart. In fact, this is it right here. So what you've got is, you've got the pound on the daily chart hitting resistance, you've got the pound hitting resistance on the weekly chart, and on the 240, what are we doing? Well, we've had this huge move to the upside, and now we're kind of like just drifting sideways. So we start to become very, very nervous, the British pound. So about 2 weeks ago, when we started flushing above the 130 area over here, just above 130, I started saying watch for a potential move back to the downside based upon again, the daily chart and again, the weekly chart. But in the last maybe, about 3 days, I've been saying to be a little bit nervous of a bounce in the pound. And let me just be clear, I don't trust the pound. I think the pound is a complete shambles right now. I think the problem is the polls have tightened. I think the last one I saw was that there's now like a 3-point gap between the Conservatives and Labour. And I think that at some point that was up around 18 points. So there's a lot more uncertainty in terms of this UK election. I still think it's probably going to go the Conservatives' way. They may not have a majority, but there's a lot more caution, shall we say. And so the British pound saw a bit of a tumble. But the place that I was looking for support, let's get all these circles out of the way, was actually just down in this area here. So I was looking for support in the British pound about 2 or 3 days ago, down around the 27 rather, 127.50 area. Now, to be fair, we didn't quite make it. I would have been looking a little bit lower. Let's just check. We kind of made it down to 127.68. I'd have probably been looking about 20 pips lower. And we've seen a nice little bounce to the upside. I just don't trust the pound. I mean, that's bottom line. I don't trust it. There's a couple of currencies I really don't trust at the moment. One of them is the pound. The other one is the Japanese yen. They're just chopping around. But again, you can see that the British pound has actually performed incredibly well, and on the daily chart even resistance became support in this area here, and you can see back in March, April again on even the daily chart we were a bit more bullish, the pound looking for a move to the upside from 124, and now in this area here 130 being a bit more cautious for a move to the downside. And now I'm a little bit more nervous, actually, of a move back to the upside. So, I think we've kind of got the turns pretty well. But having said that, I'm not touching the pound myself because I just don't trust it. I think the problem is you could get a headline out of London and the pound could be up 400 pips or down 400 pips. So I'm going to leave this alone to after the election, which coincidentally is when I get back from the UK. I'll actually be arriving into the UK on the day of the election, and I'll be there for 3 or 4 days. So I'll be coming back to the US on the Sunday, I think, or the Monday. In fact, on the Monday, I think it is. So once we get past the election and the dust has settled, then I'll be a little bit more interested in the pound. So let's step back down. So we looked at the euro, the Swissy, the pound, dollar index, treasuries, E-mini S&P. Let's look at that quickly. Where's the E-mini S&P? Here it is. E-mini S&P. Wow, finally we've seen a move to the upside. Looks bullish, doesn't it? Possibly, but I still need to see us take out this line to the upside right here, which is pretty much where we are right now. So I've been a bit more nervous E-mini S&P for about the last probably 4 or 5 days. I think it was around about the beginning of this week, maybe Monday actually, when I started to turn a little bit more cautious, ES. And until we take out this line of support or resistance, which is around 24.20, which is basically where we are right now, I'm just a little bit nervous. So if we can start taking this out to the upside, great. But as far as I'm concerned, I do not consider this the place to be getting long right here. If we take this line out to the upside, so if we start pushing up into about like 24.30 and we come back down and start finding support, something like this, absolutely. At that point, any sort of caution I had or bearishness becomes bullishness. So at that point, I'd be starting to look for support down around 24.23, not far from where we are right now. But for me, right now, E-mini S&P is still sitting at resistance. The commodity pairs, Aussie CAD, Kiwi, these have been working incredibly well. So the New Zealand dollar, I've also been looking at something very specific, which is that the New Zealand dollar has been outperforming. And by the way, I've got some people asking about gold and silver. We will be looking at gold and silver. I'll get to them in just a second. Let me just go through, finish off the currencies. We'll look at gold and silver, and we'll look at some commodities as well. So anyway, New Zealand dollar, Australian dollar, they're both working well. A little bit of a flush this morning in the Australian dollar. I'm not going to read too much into that just yet. And again, it's back to the same thing where people just look for these pip perfect moves to and from lines, and I think you just have to be a little bit more forgiving in the way that you look at a line. So for example, we look for resistance in this area right here. Technically, did we flush above it? Absolutely. The line is around 75.06. We went up to 75.16, so we had a 10 pip flush through the line. We pulled back, we hit support, but again, look at the support's at 74.24. We went down to as low as 74.19, so 5 pips through the line. We reversed back to the upside. In fact, here we actually had a gap. We've been talking about this gap for the last 2 days, the fact that we have a bullish gap above support in this area right here. Yesterday, or 2 days ago, in fact, 2 days ago, on, I guess Tuesday, I said to look for resistance up in this 74.70s area, and you can see that that did actually work out pip perfect. We hit resistance and we fell the whole way back down to support. I still think we're at support, and what I'm looking at is a downtrending slope. So I'm looking at the fact that we have resistance, resistance becoming support, 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 and as far as I'm concerned, still support. I do not see this as a breach through support. So I will be watching simply over the next 24 hours to see whether the Australian dollar can do something like this. Push back up above, come back down, find support for a leg back to the upside, which is kind of similar to what we looked at in terms of dollar index. So I'm still looking at Australian dollar. I'd been looking for resistance. We took a tumble down about 100 pips, 74.70s to 73.70s, 100 pips to the downside. Right now, I'm watching to see if we can get back up above support for a leg back up into resistance. So if you think about the correlation between the Australian dollar and the New Zealand dollar, they are typically fairly well correlated. You would expect to see something of a similar slope in terms of the New Zealand dollar. But it's not the case. The New Zealand dollar has actually outperformed the Australian dollar by really quite some margin recently. In fact, look at these two charts. Look at the New Zealand dollar. Now look at the Australian dollar. Totally different. The Kiwi has totally outshone the Aussie. Anyway, New Zealand dollar. We drew in an uptrending channel, paid attention to the uptrending channel, but cast your minds back a little bit further, back into effectively April, May. So we've actually had bullish context on the Kiwi for really quite some time. This was our original channel. Let me go back even further. So we actually had a little channel in this area here. And by the way, these lines emanate from a slope that is way off to the left. You can't even see it at this point. So these are additional slopes from an original pitchfork that goes back like 3 months. And it's still working. So we look for resistance, we fell, we hit support, we hit resistance, we hit support. Now we have a bullish gap in this area here, which warns us of a potential breach through resistance, which obviously, well, we got it right in this area here. So, you know, we're much more bullish New Zealand dollar. So then we start grinding sideways, start to look like we're rolling over. And at that point, what I said was, well, you know, the place to obviously look for support is here. Resistance, resistance. So you've got to look for this line here to become support. That's where I would be looking for support in the New Zealand dollar. And it worked out pretty well. We actually hit that support once, hit it twice, bit of a flush. Again, you know, people again get so worried when they see these flushes. Look at the close. Typically that will tell you whether what you're seeing is a flush or a breach. Look at the close on the bar. So yes, the line is at 68.65. We drop all the way down to 68.45, 20 pips through the line. But look where we close. So this was obviously a flush. So it's what I always talk about. You know, it's the initial flush. We reverse back to the upside. I want to see better support for a leg to the upside, and that's exactly what we got here in the New Zealand dollar. We're looking for it in the dollar. We're looking for the dollar index. We're looking for it in the Australian dollar, and this is what we did have in the New Zealand dollar. So now the channel that we're paying attention to has stepped up, and instead of us paying attention to this channel down here, we're now paying attention to this channel up here. So we've stepped up within the slope. Hopefully that makes sense. Bullish context. What had previously been resistance, whoops, try that again. What had previously been resistance is now support. So therefore it's bullish context. So where are we looking for a move up into? Well, I'd be looking for a move up into kind of like this area here. Well, we kind of almost made it to within a few pips. Whether it's a slight flush through, which is, by the way, is what we had here, or whether it's just a slight gap below, as far as I'm concerned, it's not that it's irrelevant, but these lines are working. That is our line of resistance right there. So we fall back to the downside, but now we start paying attention to the fact that, and this is a relatively large gap. Look at the support. Now look at this gap. Now look at this gap. What does it tell you? What it tells you is we're actually rolling back to the upside. We had the RBNZ interest rate decision, which was no change, and we saw a bit of a tumble. And what I said on the morning of the 11th, so we had literally just seen this tumble, and then on the morning of the 11th, I said it makes absolutely no difference to what I'm looking for in the New Zealand dollar. We still have support in this area here. We still have resistance up in this area here. But in terms of my expectation, because of the fact that we have bullish context, again, resistance has become support, therefore I'm looking for a continuation of that behavior. I am looking again for resistance to become support. I'm just looking for the same behavior to continue. Up we go. We breach the downtrending channel. This is the downtrending channel right here. We breach the downtrending channel to the upside. And I'm not going to get into all the detail of why we looked at this particular line, but at the time I was also looking for resistance here, and it worked out perfectly. We popped up, we basically tagged resistance on this less steep slope, which is that line right there. So we tagged resistance in this area here, fell back. That to me, right here, this turn right here is the most significant thing that's viewable on the chart right now, because what you actually have is, you have all of the resistance, resistance becoming support. So again, we've stepped up yet again. So once again, the New Zealand dollar has stepped to the upside and we've got resistance becoming support. So where are we expecting a move now after this turn? We're expecting a move to the upside. So we drew in an uptrending channel. If anything, we got resistance here becoming support on an uptrending slope. And so what we've been looking for the last few days is support along this particular channel here. So we've been looking for New Zealand dollar to find support here, here, and in fact, as of, I think this was yesterday. This was yesterday, I said, that's the place to look for support. And I don't know how close we are. Let's have a look. Well, we've tagged it. So all I'll be looking for is now to see whether we can get a decent close above this particular line. As of right now, as far as I'm concerned, the New Zealand dollar is at support in this area here. The Australian dollar is also potentially at support here. Bit of a flush below, but I'm not going to get too excited about it because what am I interested in? I'm interested in the close. I'm more interested in the close on this bar than the low of the bar. So if we, by the time this bar closes, which will be at 1 o'clock in 30 minutes, if we've managed to pull back up to about like 73.90s, about 10 pips above where we are right now, then I will look for something like this for a move back up into resistance. So Australian dollar, New Zealand dollar continue to work incredibly well. CAD, which is the, should we say the third leg on the stool in terms of commodity FX that I look at. There are others that I look at, but I'm not going to go through them all in detail. The Russian ruble is one of them. Russian ruble is massively impacted upon by what's going on in terms of commodities, as well as conspiracy theorist, US election, which was right there. So that was the US election. That was the weakest point the Russian ruble was at, is the US election. The Russian ruble has strengthened since the US election. So there's been a massive strengthening in the Russian ruble since November 7th. That's all I'm going to say about that. But we now have a change of behavior. We actually have a breach. I've been looking for resistance in this area here. We had pretty significant breach to the upside. So what do we look for once we see a breach of a downtrending channel? Well, it's not difficult. Back here, what I said was, well, I'll just watch to see if it becomes support. Down we go. Where do we find support? Right on top of what had previously been resistance. So again, we actually have the same thing. Resistance becomes support. So we look for a leg to the upside. We got a leg to the upside. Where would we look for resistance? We would look for resistance right here. We didn't quite make it. Let's get the line out of the way. You can see we just didn't quite make it to resistance and we've fallen back. As far as I'm concerned, the channel that the ruble is abiding by is this one right here. And I'm looking for a potential breach to the upside out of that channel. Canadian dollar. What am I looking at on the Canadian dollar? CAD, I was looking for support a few days ago down around the sort of like 33.50 area. So we've actually seen Canadian dollar strengthening quite nicely down into, or very close to at least, support. And again, you can see what I was paying attention to just a few days ago was the close on this particular bar here. I'm a bit nervous of CAD having missed support by a few pips and that we might be starting to march back to the upside, which would obviously imply a move to the downside in crude oil, which, well, that's not massively surprising considering what's been going on in crude oil lately. So that's the currencies that I'm kind of predominantly interested in. I've been looking at some others like the Noki and the Peso, but I'm not going to run through all of those today. Let's step back down. Let's look at gold and silver, because I know a lot of you are waiting on gold and silver. And then we'll look at the commodities. What's going on here now? Okay, so two or three things to talk about. Number one, gold. I've been more bullish gold since weekly support. Let me bring that up. Where is the weekly support? Here it is. So here's our channel. We've got resistance in this area here, bit of resistance, support. We breach to the downside, looking for resistance. We fall, support. Started paying attention to this particular support back at the beginning of May, and I was looking for a move higher from about the 12.10 area. That worked out pretty well. I actually did post this particular chart publicly as well, and I said, in fact, if you recall, gold's actually seen a bit of a tumble, pretty reasonable move to the downside from the 1290s down into the 12 teens. And I basically, throughout this period, have been consistently saying, I see nothing bullish, we're just bearish, there's nothing to get excited about. And I think it was on literally the morning that we bottomed in gold that I tweeted out a chart and said, okay, now I'm looking for a turn north. And it was really for a variety of reasons that relates back to what's going on in treasuries, as well as what we're seeing in gold and silver. And if we actually look at the smaller charts, what I've been paying attention to, if you try and ignore all of the lines, let's try and clear up the chart a little bit if I can. What I've been paying attention to is 1227, is it? Yep, there, 1227. So I was paying very much attention to 1227. It had been support in this area right here. It had turned into resistance in this area right here. And what I talked about on, I believe it was like the 11th, was on the morning of the 11th, I actually said, I think that we'll take 1227 out to the upside today. And it actually occurred at 2 o'clock on the morning of the 12th. So I missed it by 2 hours. But look what happened after we took out 1227 to the upside. Look what happened subsequently. We actually got support. So effectively what I'm looking at this point is a shoulder, a head, a shoulder, with 1227 being the key level. So as long as we're north of 1227, everything's looking good. And basically that was the beginning of the move to the upside. So we've drawn in a modified shift. I've been looking for support back on the 26th down in this area here. I've been looking for support again on the 30th down in this area here. Lots of circles, lots of lines. Let's try and tidy up things a little bit. I didn't really want to clear it up quite that much, but regardless. So you can see we came down, we tagged it. This was just yesterday morning, down around 1262. We had about a $14, $15 move to the upside, so that was quite nice. But there was a bit of a problem yesterday, and I started to turn very cautious during the morning yesterday when I saw what was going on in silver. Silver very often is the canary in the mine. Very often you can, if you see a bit of a divergence between gold and silver, it's that gold is seeing some headway to the upside and silver just is not. And that's exactly what happened yesterday. And I talked about this morning in depth, and it became a lot more cautious, gold and silver. Which was appropriate, because since then they've actually seen a bit of a pullback in gold and, well, definitely in silver, although we almost tagged my support from this morning in silver. But look at yesterday. So yesterday is basically kind of like this area here. Now go and look at the same equivalent area in gold. Let's get all these circles out of the way. So for gold, it was here. So look how gold saw basically a nice march to the upside throughout the bulk of yesterday's session. But look at silver. It kind of just, it did not participate in this move to the upside. And I became very, very nervous in silver. Became very, very nervous. We needed to hold above support, which for me, I'd been looking for support in this area here, which in all fairness worked. I mean, we came down, we tagged it. We saw about a 45-cent move to the upside. We came down. We found further support at that particular line. So the support lasted all the way until basically last night. And then we saw a big flush to the downside. Next place I was looking for support was down around 16.95. Looks like we came close. Whoa, where'd the line go? There you go. There it is. So we came down to like 16.98. So we're about, well, to be fair, 2 pennies. So we're about 2 pennies away from the support I'd looked for this morning. So it came pretty close. But here's my problem in silver now. Now that we've fallen beneath that support line, think about what we've talked about in terms of dollar index, Australian dollar, New Zealand dollar, British pound. You know, when you have a support line and it works and then you fall through it, what do you next look for? Well, you look for it to become resistance, something like this. And that's exactly what I'm looking for in terms of silver now. So now that we've fallen through support, which obviously is, well, this line right here, unfortunately, I'm now looking for it to become resistance. So I'm looking now for this. So I'm actually going to be watching silver now quite closely. I'd become cautious because of the fact that it was diverging away from gold. It fell through support, which again is this green line right here. Gold, and what I said at around about 6:30 this morning was, and bearing in mind, gold at 6:30 this morning was like here. And so where is our support line? Let's try and clone that down. Okay, our support line is right here. There's our support line. So where are we in relation to support? Well, we're above it. But what I said this morning was I would be very surprised if gold did not take out support to the downside. And it was less about what was going on in gold, and it was more about what's going on in silver. And the fact that silver has already, in a fairly dramatic manner, sliced through support to the downside. Therefore, I expect gold to do something similar. I expect gold to take out support to the downside. And where is next support? Well, next support isn't on a slope. Next support is on a horizontal. As far as I'm concerned, the two levels to pay attention to as of this morning were 1266, which I thought we would take out to the downside because of silver, and that puts then the focus down to about 1262. We're not really seeing a lot going on in gold or silver today. Yes, I admit, we've seen a bit of a flushing in silver, but I'm more bearish than bullish gold and silver right now, and it's because of the fact that silver has taken out support to the downside. Admittedly, we're bouncing at support down in this area here. Admittedly, we've had a nice move to the upside out of support. But again, what am I looking for next? I'm watching now for resistance up in this area here. Gold, we need to hold above, as far as I'm concerned, 1262, which is this line right here. We take out 1262 to the downside, and if we take out 1698 to the downside, as far as I'm concerned, my attention turns to bigger time frames. Speaking of which, if we do start to take out support on the 240-minute chart and we start moving down like this, I will become very bearish gold, because at that point we actually have resistance, resistance. Now we step down, resistance. Now look at the gap, resistance. Now look at the gap to resistance. That would tell me I will look for a move to at least 1224 to the downside, and honestly, probably through to the downside even further. Silver didn't even make it to resistance. And by the way, just to be clear, when I said resistance, I'm not being bullish, saying I'm looking for a move up into resistance. I'm being bearish. This had previously been support. Look at the support. Second support. We breach it to the downside. I look for it to become resistance around 1760s. We made it to 1745. So I'm turning a bit more cautious gold and silver now on larger time frames, and I'm going to be using these smaller time frames to guide me. I will look for resistance around 1732, 1733, and in gold, as far as I'm concerned, we've already had a dip below the first support line. We've seen a little bit of a bounce, but we're not really seeing much action today. Non-farm payrolls will really determine what's going on, and we've got Fed watch, like I said, at 88% in terms of a rate hike coming up in 2 weeks. So if we start taking out 1262 to the downside, I would just step aside, because at that point, as far as I'm concerned, we could be looking for a move back down to about the 1220s on the weekly chart. Let me run through a few commodities real quick. Okay, commodities. Crude. For some reason, this is the vehicle that everyone wants me to look at. And crude had been working really, really well. But now that we've seen this huge move to the downside, believe it or not, this is what I'm really paying attention to. So last week, this one worked out incredibly well. This was, I forget what day, Thursday of last week. So Thursday of last week, I drew an uptrending channel. I basically said watch to see whether that channel became resistant. So I know it looks like a bit of a mess. In fact, let me get all these circles out of the way. See if we can tidy up this chart just a little bit. It really is a bit of a mess. So you can see what I'd drawn in. So this is what I drew in on the morning of Thursday. I said, look to see if we reverse back up and see resistance in this area here. We reversed up. We tagged it up around 51.22. Saw $3 to the downside. I drew in a very speculative fork this morning. Looks to me, based upon what I'm seeing just in the last few bars, that we're abiding by that uptrending slope still. So in fact, what we talked about this morning was we had an interesting 1, 2, 3 rejections on a shift. Looks like as of right now we're not paying attention to that shift. We had crude inventories out an hour and a half ago. Based upon what I'm seeing right now, in fact I will get rid of that. It looks based upon what I'm seeing right now, that the uptrending slope is still working. It looks like what we're seeing is double tap, double tap. That's the place. If we get through 49.15 to the upside, my gut feel is we're going to see a move up to about 53 based upon the weekly chart, which is this chart right here. Big change out on nat gas, huge change out on nat gas this morning. So nat gas is one we've been following for about the last, I don't know, probably about the last month. Again, look at this, resistance, it became support, 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 support. We look for a leg to the upside, resistance, resistance, became support, support. Up we go, resistance, resistance, down we come. I was looking for a move down into this area here, and I was looking for a bounce right here. That's where I was looking for a bounce in nat gas. We got the bounce this morning. Let's get all these circles out of the way. So we technically did get our bounce this morning. Then, of course, we got the nat gas numbers out earlier on, and then poof, down we go. This is a very significant move in nat gas. And what I said this morning is if we take out 307 to the downside, which is effectively right there, we take out 307 to the downside, it would be a very significant change of behavior, and it would make me pay attention to the weekly chart for a potential move down into probably about the 246 area. Again, we have failed to get to resistance. So back in January, February, I'd look for a bounce in this area here. You can see that that's worked out incredibly well. Huge move to the upside. I'd actually been looking for a move up a little bit higher to about the 359 area. Didn't quite make it to resistance. Looks like we may be rolling over. And what I said this morning is, because I know some others have been looking for a larger move to the downside, what I said was it would take a breach of this line right here. So there you go. I want to see a breach of that line there before I start looking for a larger move to the downside on the weekly chart. We've now had that, so now I am watching the weekly chart for a potential larger move to the downside. Cocoa. This is one that I know some of you are paying attention to. We actually have a member in Ghana who watches this on a daily basis. Look, as far as I'm concerned, cocoa, it's had a relatively large move to the upside. People were telling me yesterday it was like the biggest move to the upside in many years. But as I said this morning, look at this for perspective. Look at, just for perspective, look at the move that we saw to the upside over the last day or so. This particular move right here. It may be a huge move to the upside, but in terms of where are we in cocoa, it means nothing. It's noise as far as I'm concerned. Until we can take out 2100 to the upside, which is this line right here, it's just noise. So I'd looked for support in cocoa back in April down in this area here. We just didn't quite tag it. I'd been looking down around 1730. We bottomed at 1750, started working our way back to the upside. Where do we look for resistance? Right here, 2100. If we start taking out 2100 to the upside, then I become a little bit more confident or bullish. And coffee is the same story. And again, coffee, we've had people asking me to look at coffee recently, and what I basically said is downtrending channel in coffee until we take out 134 to 138 to the upside. As far as I'm concerned, it's all noise, and as far as I'm concerned, the channel that I'm paying attention to the downside is this, and I see absolutely nothing that has changed in coffee. And sure enough, we've actually not only turned lower, we're back at multi-month lows again. I think sugar is one that we looked at recently. So I was looking for sugar resistance up in this area here. We came close. And again, this is another one where we just didn't quite get up to resistance in sugar. Around the 1684 area, we turned back down, and we are now at lows that go back to effectively April of last year. So this is basically 12-month lows in sugar. I'm actually really pretty suspicious in a lot of these commodities right now of a potential extension lower, I have to say. Someone's saying, can we look at oats? We can. Let's go to the ags. By the way, corn. Make sure that's fresh. I am wary of a move to the downside in corn. Again, this is the slope that we've been paying attention to in corn. That's it right there. And again, if you look, support, 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 all the way along here, support. Now look, resistance, resistance. So I'm looking for a potential move to the downside in corn, and I'm watching. And the alert that I will have is when we start taking out this line to the downside. We're threatening it right now. Anyway, someone's asked me to look at oats. So oats on a weekly chart. We're at resistance right now and looking like a potential punch through to the upside. This is a resistance line that harks back to 2014. 1, 2, 3 touches. A fourth touch that occurred in January, and this is where we are right now. So I'm going to be watching oats pretty closely to see whether we can punch through basically 2570 where we are right now. The only thing I will point out is that we actually do have bullish context on this particular chart. We actually have resistance. So resistance, resistance, we breach, it becomes support in this area here. So we do have bullish context. And what that means is if I'm expecting a move through this line to the downside or a move through this line to the upside, it will absolutely be a move through resistance to the upside. So ultimately, I am looking for a punch through resistance, but until we get through 2570, 2580, where we are right now, I see absolutely nothing in terms of a change of behavior. So I'm going to keep an eye on oats to see whether we can actually punch through this 2580 area. But again, we do have bullish context as of right now. Rough rice continues to grind higher. We've been looking at this wedge in rough rice for about the last month, and I talked about the fact that rough rice was becoming a lot more volatile back in the end of April, and we've actually now started to see it move back to the upside. I think that rough rice is still bound for higher prices. I turned bullish rough rice back probably when we were about like 9.5 or 9.80, and here we are up north of 11 right now. So I still think that we're going to go higher in rough rice. Live cattle, someone's asked me to look at live cattle, and live cattle, this is another one that's worked out quite well. So if you recall, I've been looking back in January for resistance up in this area here. We popped up tag resistance and saw a big tumble, big push to the downside. But what I've been looking for more recently, get all these circles out of the way, I've been looking for support down in this area here, and it looks like we're actually seeing a bit of a lift out of support right now. Ellen says, I trade in a similar way. Question, do you apply this system to individual shares or stocks, I guess? Look, I myself don't. So I trade predominantly commodities, futures, currencies, and indices. That's basically my involvement. I trade a lot of these slopes via options. So I use options to trade the slopes, but I do the analysis on generally those vehicles. But that doesn't mean that you can't. I mean, I remember probably 3 or 4 years, maybe 5, 6 years ago, putting a slope on US unemployment, and that worked out incredibly well. So I literally imported the data for US employment going back, or unemployment going back like decades, and put a slope on it, and we were able to call resistance in that. So you can use it for any vehicle, but I typically only use it in terms of commodities, futures, indices, and currencies. Julian wants to look at Palladium. Yeah, let's go and look at Palladium. I know this is one we've been, in fact, someone else asked me about Palladium this morning, but I wasn't at my chance to look at it. In fact, here it is. So Palladium. So we had an ascending wedge in Palladium, and back in this area right here, what I said was I was incredibly nervous of a move to the downside in Palladium, purely because obviously this is a textbook ascending wedge, and sure enough we got a nice tumble to the downside. We've seen a pretty quick reversal. I'd been watching to see if we were going to get resistance around like 806, 808 in this area here. Looks like we punched through it, and therefore I'm going to be keeping an eye to see where we close today, tomorrow, basically into the weekend. I want to see whether we're going to see resistance. I'm not too bothered by the push above the line, because you could quite easily make the case. In fact, this was a chart I sent out a little earlier on this morning, that potentially support in this area here, bit of a flash, becomes resistance. So I'm not going to get too concerned about it just yet. And by the way, let me just be clear, this is an uptrending line. So typically, because it's an uptrending line, I would not be shorting it, purely because you could be 100% correct that we're going to see support here and still get stopped out. Think about it. We can come back up, hit it a second time. We could hit it a third time. We could hit it a fourth time. We could even hit it a fifth time before falling off of a cliff. The problem you've got is, if you are short here and your stop is there, you're kind of screwed, because you just got stopped out and then it fell off of a cliff. So typically, I would say 95+% of the time on an uptrending slope, my only trade is a long. And so you might be saying, well, how do we apply a long in this case? Well, it's simple. What you look for is, if we actually breach way above the resistance, come back down, and it becomes support like this, that's how I would be looking at trading Palladium. So I personally wouldn't be trading short on an uptrending line. What I would be doing is, if I was convinced that Palladium is about to tumble, I would be looking for the opportunity to draw in something to the downside. So let's just say, for example, we saw resistance in this area here and we fell. And then we came back and we saw a resistance and we fell again. Then what I would be doing is, the way I would look at it is, I would do this. I would draw something like that in. I would draw like an Andrews fork or something like that. That's how I would actually look at trading Palladium to the downside. And then that way, potentially, you might get resistance on a speculative downtrending Andrews fork. But the point I'm trying to make is, you are now trading short on a downtrending line as opposed to an uptrending line. And the reason is, doesn't matter how many, as long as you're right in your analysis, doesn't matter how many times you hit this line, you'll never be stopped out. Because if you're short in this area here, and your stop, let's say, is up in this area here, then you can hit this upper parallel 10, 15, 20 times, and all you're going to do is work in the right direction. The line is going in your favor, it's not going against you. So that's Palladium, Julian. I'd be honest with you, Julian. I'd really just wait and see how things resolve over the next day or so. We've got non-farm payrolls tomorrow morning. I'm never a big fan of doing too much into non-farm payrolls. In fact, I will be basically sitting on my hands tomorrow. So I think we've covered a whole bunch of vehicles. Let's go back and see what's going on with those treasuries right now. ES is still working its way higher. Treasuries. I think treasuries are going to take out support to the downside. I'm telling you now. That's what I'm looking for. I'm looking for this. I'm looking for treasuries to take out support to the downside as we work our way into a potential rate hike in June. And therefore, if we do start seeing treasuries take out 153.05 to the downside, I will be looking also for gold to continue to weaken. And you know, I've just talked about a little while ago why I'm kind of like a lot more cautious gold and silver now. That would ramp up even further if we actually see treasuries take out 153.05 to the downside. Mark wants me to look at the FTSE. Mark, I've got no problem looking at the FTSE. I personally think I would be really wary about touching the FTSE right now. By the way, if anyone's interested in which European index has done incredibly well out of Brexit, anyone got a good guess? Actually, what has FTSE done since Brexit? Brexit was it June? There it is. So basically, we were up from like 6,100 to 7,500. So we're up 25%. Yeah, Mark, I posted it, I think, haven't I? But absolutely, Mark's absolutely correct. So the FTSE's up 25% since Brexit. There is actually a European index that's up, as far as I'm concerned, in relation to Brexit, it's up. But it's up even more than that. And it's the Irish one. Here it is. Brexit referendum was right here, June of last year. And look at this, we're up from 5,200 and we're up to over north of 7,000. Huge move to the upside in the Irish index, the ISE. Huge move. Anyway, back to FTSE. I digress. Sorry. FTSE, I wouldn't touch it. I personally think FTSE's like it's going to be so volatile over the next week. There you go. That's about all I'd watch, Mark. We've just tagged resistance till we take out like 75.85, 7,600 to the upside. I would probably just tread very, very carefully. That would be my comment. I don't know if that really helps you at all. To the downside, I would look for support down around this area here, around 74.10. This line here hasn't really done anything lately. We did actually have a couple of double taps in this area here, but it hasn't done anything lately. So, well, you know what? That's kind of maybe a little unfair. I just saw this low right here. But I'm going to remove it anyway. There you go. It's gone. So what I would pay attention to, if you're watching the FTSE, is resistance, basically where we've just tagged right now, and support down in this area right here. That's what I'd watch there. Yeah, no problem. All right, guys, I'm going to wrap it up. Again, don't forget, and I'll send out a link to the recording. If you're interested, I'll be in London, be over in the UK next week, one day, and we're going to be doing a webcast if you're interested. And if you just want to see the analysis each morning, hope to see some of you join up. But I hope it was a useful webinar. And I will maybe do another one in, where are we now, beginning of June. Maybe I'll do another one in July. We'll be well into the summer by that point, and we should have more of an idea as to how the FTSE and British pound is going to react to what's going on with the UK election. Guys, you all have a great afternoon. And again, I will send out a recording of this, or a link to the recording of this, to everyone that's registered for the webinar. You all have a great day. Take care. Bye.